Hey guys, so my name is Sabrina Montavo. I am a mortgage broker. It is June 20th today. My goal ultimately is to help you make informed decisions around opportunities so that way you can access opportunities, make better financial sound decisions, having all the information that you didn't even realize, or maybe somebody had missed when they were explaining things to you here or there. So I'm just here to help. I have a huge background with finance. I have worked 12 years at PNC and Citizens Bank. So here in the Michigan area, Detroit area. So I have a ton of experience with working face-to-face for about 12 years. I worked at Rocket Mortgage for 3 years on the retail side, and that was really great. So I have a lot of mortgage experience, refinance in particular. I also worked at a brokerage for a little bit, not too long ago. So I have experience from working in the brokerage, seeing the other lenders that are out there, mostly like the non-QM stuff, but also seeing what just in general other lenders are able to do. So it's been very helpful, very enlightening. But I realized that I know a lot and can definitely help a lot. I feel like this is my calling, to where I just want to make sure that you're informed. Things are changing within AI. I tread on the side of caution. I err on the side of caution when it comes to AI. It is very helpful. I will let you know that. But yeah, just exploring and making sure it's all going to make sense. But ultimately, I'm in limbo right now. I am doing life insurance too, so I'm juggling a couple of things. But one thing that's been very important and very a question that comes up a lot is around your mortgage payments. So I've had this question posed to me because it's a very common question as a mortgage professional would ask. Just if you're looking into a refinance for somebody, simply put, or you're just qualifying them, you want to make sure you have the right information when it comes down to the mortgage payment. But what has been even more enlightening is that a lot of people don't really know what their mortgage payment consists of or what it is. So they ask me, and I have to re-explain this concept to them. So I just wanted to get on here and explain a little bit about the mortgage payment. I appreciate you listening so far, and I promise it's going to be super impactful. Just want to make sure that all these videos I'm making are, and all my edits and stuff like that too. So again, it is super important that you know what goes into your mortgage payment. Knowing why and knowing this information is very, very important, because if you're looking at a refinance or if you're just looking at a place to live, to be honest, you want to know what you're getting into. So this is not financial advice. This is just my experiences and what I know when it comes down to this information. But yeah, again, I've had a handful of people ask why the mortgage payment is high, or just mentioned to me, oh, my mortgage banker told me that my payment would not change. And people have definitely said that to me. So when it does change, they are surprised and they ask me instead of asking their mortgage broker. So it's very exhausting, but as a professional, I feel like you should be explaining this on every single phone call if somebody doesn't really know what things are, or even if you're face-to-face in person, somebody just buying a home, they should know this information too, because it's going to be impactful for them and their budget. But yeah, I started my career working at a bank in August of 2008. So that was a crazy time within the financial industry. I was young, so I really didn't know. I was just getting into it and getting my feet wet. So as a part-time banker, I worked my way up to full-time banker, took on more responsibilities, worked my way to where I could work the desk and the banker. So I got my sales in, always hit my referrals, always on goal, each and every month, if not above that. So that's always been something that I really like to highlight. So I worked at, 2 banks, one of them being PNC, worked my way up to the desk where I was there full time. And then I also worked at a different bank, Citizens. I was licensed there with my Series 663, and then life and health annuities producer for Michigan. And I am working on that one again. So it's been taking a lot of my time. So I appreciate your patience with me and getting things together. But yeah, so I worked at those 2 banks. Like I gained a lot of experience face-to-face, all things financial, whether it's like checking, savings, money market, CDs. I also helped with mortgage referrals, investment referrals, home equity loans, lines of credits, both of those, credit cards, personal loans, installment loans, revolving, everything you could honestly think about. I even helped with the rollout of the debit cards, the online banking, all that good stuff too, which is very convenient, to be honest. So I helped during a lot of different stages when it came to the bank world. I was also sent to North Carolina to help with a merger, so that was pretty cool. But yeah, I'll go over this mortgage payment, so I'm sorry I might go on a couple of rants here and there, just reminiscing, but yeah, this is good info. So we'll get into it here. So your mortgage payment. If you have a mortgage statement nearby, please grab it. It's so helpful because now you can kind of like compare things. So grab your mortgage statement, okay, and pull it out. Look at the first page. It's going to be either in like the top right-hand corner, top left-hand corner. I don't really know. Everywhere puts it differently. So you have your mortgage statement in front of you or pulled up online or whatnot. So with this mortgage statement, what I want you to do is look where it says principal, interest, escrow, or some companies might break it down, taxes and insurance. You get what I mean. So, well, let's get into it. All right, so your principal, this is the amount that you borrowed to buy your home. So this is like, say if you paid about $250,000 for your home, for your loan, ultimately your home, let me grab my calculator real quick. So say, hypothetically, you put like 20% down, okay? So this means like you don't have that mortgage insurance, PMI is what they call it. By the way, you only need about 3.5%, and some companies are even a little bit better depending on qualifications, to buy a home. So just so you're aware of that. Oh, I realize people don't know that either, but that's okay. So anyways, so you got your principal. This is the amount of this is your loan. So you have your 20% down payment. So 250,000 times 0.2 gives us 50,000. Okay. So, so yeah, so actually I did that wrong. Crap. Okay. So say if we're going to use a different example. So say if you use 300,000, 300,000 was your purchase price for the home. Okay. So this is the amount, the sale of the contract, the purchase price. 300,000, okay? So 20% of that is 60,000, okay? So 300,000 minus that 60,000 gives us 240,000. I always like to use a calculator. I was always taught calculator when I was in middle school, so I just have always used my calculator. So sorry, guys. I know some people are so upset about that, and they're like, why do you use the calculator? But honestly, I was taught that way, so I'm sorry. That's the way I was taught. But anyways, I get that a lot. Plus, I gotta just double check my work. I just have that thing where I have to just make sure. No, my child, you cannot use my hotspot. I don't even know how to ask that. Okay, sorry about that. Another distraction there. Okay, so your principal is the amount that you borrow. So that would be the $240,000, okay? That is the amount that you, the 240, that's just put that like somewhere, 240,000, okay? Interest is what you're paying back for borrowing the money. So mortgage payments do originate on a amortization schedule. That's how they work. What that means, I'm gonna break this all down for you. Anyway, so it's an inverse, like, it's an inverse relationship. So basically, the interest, you have your principal and your interest, okay? Your mortgage payment is going to consist of that principal and interest, okay? So there's part of the money that is going to principal and part is going to interest. When you're first paying your mortgage, and even if you refinance too as well, the principal is going to be less than the interest, okay? So the interest is going to be more. You're paying more of the interest down first, and then you move to the principal, like when you're halfway through the loan, okay? The more money you put on principal is always going to help you get that payment down. So interest is just like what you're paying back for the money. If you look at an amortization schedule, you can pull anyone up. Usually I use bankrate.com, or there's different ones out there. I'm not really sure if that's the right website name either, but it's like Bankrate. Anyways, so when you pay more on your principal, that's going to cut into your interest and make your interest lesser in the long run. So I just want to let you know that automatically, okay? With these two amounts, you're always going to have these. These are pretty standard. But yeah, and when you're refinancing, this information is extra helpful because you can make a decision off of an amortization schedule, whether a refinance will be worth it or not, depending on the term, depending on the interest, your goals, all that good stuff. So, just know how to use the amortization schedule, and I will be able to teach you that here. I can teach you that pretty simply on another video. But anyways, so how you pay your home off faster is simply just putting extra money on that principal balance. It's going to eat away your interest, going to get rid of it. Your loan terms are just going to automatically go down with it, like month by month by month. So that's nice to know. Okay. And there's different things you can do. Bi-weekly payments. You can make like an extra payment a year. You could just do different things here and there to kind of like cut into that and cut your loan down, your term, to maybe from like a 15-year to a 13-year or something. And that's especially helpful if you're going to be retiring and you kind of want to like see what this is going to look like for you, when your mortgage is going to get paid off, and if you want to pay it off sooner, how much do I put on my payment to do that? So that's especially helpful too. I know it's not the most like fun thing to do, but it is fun when you think about retirement and you think about free time and stuff like that. So anyway, I'm sorry, I am kind of reading my notes here and going along with you, so that way you get all the information. So your principal and interest does stay fixed. There is something you can always do with your mortgage. It's called a recast. I'm just going to take a minute to pause. I'm talking a lot here. Bear with me. Let me talk to my child too. Child of mine?
What?
Hey, child of mine?
Yeah.
I'm making a content video, so I'm just letting you know just in case you're wondering what I'm doing. I'm making a content video in case, you know, like wondering who I'm talking to, okay?
Yeah, okay, mother of mine.
Okay, go. Get out of here. What?
I don't have ice cream.
No, it's too early for ice cream. But good try.
Okay, bed.
Okay, go. Bye. Can you close my door? Thank you. Thank you, thank you. Yes, there's no internet right now. Oh, man, what do we do? Oh my God. Children, they're so fun. Anyways, this is a perfect time because I don't require internet for videos, so I'm good. Hold on. Just eat breakfast, you guys, okay? Well, Abel, you know how to get yourself breakfast. Okay. Anyway, back to our fun conversation about the mortgage payment. So basically, okay, so there's this thing you can do and it's pretty cool. A lot of people probably don't really know about it, but like say if you're taking a mortgage, but you're also going to be getting like a lump sum sometime in the near future. Maybe it could be like a lawsuit, money from a lawsuit, you know, you're going to get an inheritance. What else? Sale of house, divorce, like there's so many different situations where you can anticipate a lump sum of funds, just to come your way. So I've seen everything. And basically, you can, there's something you can do. You can use this really cool tool. It's called a recast. So most servicers will allow for recast. I don't really know what the rules are regarding that, but what that means is that you take your mortgage out for what? We'll just stick with our same example, $300,000. So if you take your mortgage out for $300,000, you have your mortgage payment and everything. So basically, I would pull up the amortization schedule, but I actually don't have internet, so that doesn't work. Man. Anyways, $300,000. Okay, so say if you know you're getting an inheritance or settlement, some kind of money, a lump sum of money that's going to be coming your way, and you want to get your mortgage payment down, which is a very smart thing. So say if you're getting a settlement of $100,000, maybe, or maybe you're getting more and you just want to put a chunk towards the mortgage payment and get it down for now. Whatever works. So you have these tools available to you. So it's a recast. You call the servicer. Normally they charge you for it, anywhere from like 100 to 250, I think is usually like typical. But anyways, you pay this, it's totally worth it because you're cutting your interest down and you're getting into a better payment as well. So peace of mind there. And budget. Of course, right now the cost of living is very, very high in this world, and it's hard to kind of like make ends meet, so it's very stressful. Anyway, I wish I was getting a lump sum of money, but that's okay. So say you put this $100,000 towards your mortgage ban, you know, your loan was $240,000, you know, $140,000. So that can definitely cut down that mortgage payment a really good chunk. So your principal, your interest will be re-amortized, and that's how that works. So you can do that if you're getting a big chunk of money. Just call a servicer of your mortgage, and they should be able to explain everything. If you can't do that, there's another option. You can actually do a refi. So you can refi. There are closing costs, but if it's worth it to you, like it depends on, of course, where your interest rate is. If you're in like a 2 or 3%, like I don't think that's the best idea to refinance. Those are just like a couple pieces with your principal and interest, a couple things, what you can do when it comes down to it. But you can also pay your home off quicker, maybe instead of a 30-year, pay it off in 20 years. And then also another thing I always recommend too is taking a 30-year mortgage and then putting extra on your principal right away. And you automatically know, like, you're in a 20-year term, you know how much you got to pay to get the home paid off in 20 years. But say you have a month or something happens financially, you need your money, you want to have some extra leverage. So what you could do is you could take your foot off the gas, simply put, and just continue with the regular payment, so that way you can stop that like auto pay for a month or two, the extra payment that you're making, or just stop writing the check out, or however you do it with your bills. Everybody handles them differently. So you can always do that. I recommend that because it's like especially helpful because as life goes on, we need different things. Like, for example, my children both went to daycare when they were really like little, but well, this is pre-kindergarten. So I did send them to preschool, and one of them cost the my youngest cost 700 a month. So that was like a big chunk of money that was like hitting the budget. So basically, it's nice to have leverage. Like, say if you have something like that where you have to readjust things, you can just take your foot off the gas. That probably lasted his daycare, what, like 9 months. So, if you have leverage to kind of do that, you can do that. Maybe there's something else going on financially where you would need the extra money. I mean, it could be anything from, I know we're all supposed to budget, all that good stuff. But I mean, school supplies, when August hits, that's like, okay, now we have school supplies. For my family, it's basically like from the month of February, I think like pretty much all year, there's multiple birthdays going on. I mean, Mother's Day, Father's Day, just things like that. Like, there's just a lot of expenses that come up unexpectedly. So, like, say if you're having a tough month or something, you can actually let off. Say, I'm going to take this extra money that I've been paying, and I need it, so I'm actually going to use it towards so and so this or that, whatever you want to do. So, anyway, so that's your principal and interest, kind of like summarized in a big glance. Now you have your taxes and your insurance, okay? So your taxes are simply just the property taxes that you pay. This is where you live. So they're paid to fund your schools, fix roads, maintenance, things like that. So certain areas will have reduced or no taxes too, just depending. If you're a veteran, that's always a good thing. If you're a senior citizen, that can be a good thing too. So these are just where you live, like your property taxes. Everywhere has different property taxes. I know some areas are higher than others. Well, that's what you pay to live there. I pay to live here because, it's loud. There's helicopters. There's like, it's a busy area. So I do pay less in my taxes than you potentially would, but you might have more peace. It just depends. Everywhere is a different. Definitely research the area and stuff like that. Also, I have to dodge potholes pretty much every day. I know where every pothole is on my way out of my town, so it's very fun. But, I'm paying to live where I'm living, so that's kind of the result. Anyway, and I do live in a nice area too. It's just, there's a lot. I'm not talking to you, sorry. There's a lot, there's a lot that, I'm sure it's expensive and stuff. I don't know how the county budgets and things like that work, city. But anyways, okay, so there's also insurance. Okay, so you have your principal, your interest, your taxes, and now your insurance. Okay, so this is case something happens in the home. You can't get out of this one because if you're in a mortgage loan, that lender is going to require you to have homeowners insurance. Because why? I mean, just in case anything happens to the home, you have to pay that insurance because things happen. I mean, accidents do happen and you never know, like, anything. So that would kind of suck if something happened to your home and you had like nowhere to turn to, no funds, like, so it's very important to pay insurance. So this component of the payment is something that you can actually shop around for, or there's a ton of information out there. I know like there's comparison websites, things like that. So however you like want to choose, say what's important to you, what do you have in your home, things like that. That would be important. So basically, you have to pay your insurance. I recently shopped around for insurance and I got a lower rate with another company. So periodically, like you can shop around. Some companies will raise the premium from year to year. So like if you want to go back to that normal premium, because that does affect your payment. So your taxes and your insurance both affect your payment. So if a mortgage broker was out there and told you your payment's never going to change, well, part of it, that's partly true. It's 50% true. Um, the principal and interest is what they're referring to. That part's not going to change. No, your taxes and insurance will affect your payment. And if you have a servicer that takes care of them, which most people do, they escrow their payments. Just from what I've seen, there's some people that don't, and I can get into that too. Um, but anyways, your insurance is definitely something that you want to pay. Your taxes, those can go up yearly, pretty much. So just expect that. Your association dues. So like some people live in a homeowners association, a subdivision, different area, condo. Um, so you have association fees. So those are separate, but they're still a housing expense. So just be aware if you have one in the area. But these are more common, like with, and they're more expensive too, with things like amenities, like a pool, or a gym, landscaping, maybe security. So, these things all cost money, and if you like to live in a like you like peace, I mean, you're paying for that. So yeah, I have came across a situation where somebody had two association payments too. So definitely do your research and just make sure before you get into buying a home. Anyways, so you have your taxes, your insurance, your principal and your interest, which we talked about. Um, and yeah, so taxes and insurance, again, the mortgage company has an escrow account. Um, Also, there's external factors that can affect it too, like the inflation or property values in the area can affect those taxes, um, or insurance, and like tax policies as well, local tax policies. So kind of went over that too. Um, there are those that do not like to have their escrow held with the servicer of their mortgage company. So those those people, they maintain full control. They avoid overpayments to third party management, because that can happen too. You can overpay with your escrow. You have an analysis each year that happens, and they're supposed to readjust things for you if things go up or down. So that can help there. These are more I come across like financially savvy clients that I've had, and they invest a lot too, so they kind of know. But yeah, they actually would rather invest their money than have it sit in escrow. So they take advantage of every penny, which is fine. That's totally fine. But when you're doing a mortgage or a refinance, sometimes they charge you a little bit with you when you don't escrow. So they might charge you like a little, like a percentage point, like a little bit, not that much. But anyway, so we went over the homeowners association fee. Oh, and some homeowners association fees can either get paid like once a year, twice a year, or quarterly. So they don't always have to be on a monthly schedule like your mortgage is. But yeah, it's an important expense to kind of to know about when you're looking for a home. And budgeting ultimately in the end. So another thing too I came across as well is when I've actually came across this personally too. So when considering a refinance, a lot of lenders or brokers will just give you what the principal and interest payment is. So it may seem like you're saving monthly like a ton. They give you that, and then they leave it to you to like decide your taxes and insurance, but it's not always the smartest thing to do because um, you want to have like a decision that's going to make sense for you, and then not have that item pop up to the very end where you see the like final figures, and then you're like, oh shoot, like do I really want to do this because this is like more than what I was thinking about. That I like situation would it's just horrible. I just always want to stress about those things. They're little things, but they're important things. If you choose not to escrow, that's okay. Okay, I think I got it all. I think I had recapped all things on the mortgage payment. If there's anything I'm missing, I'm sure I'm probably missing some things or here or there. Just let me know either in the comments or whatnot. I can always refine this video. Um, but I hope it clarified things with you and your mortgage payment, just like knowing the ins and outs, what this is, what this means. If you ever feel confused, you kind of know like what you're actually paying on each item. Other than that, yeah, so my goal is just to make these quick videos. Well, this one wasn't really super quick because there was a lot of things going on. But anyways, I hope you all have a great day. Thank you for your time, and yeah, just take what resonates with you, and I will have some more content coming out very soon. All right, bye.